learning from the market corrections and report it today. So let me start with showing you the crashes which has happened so far, major crashes, right? If you start with the 1929, the Great Depression was the biggest shock for the markets, right? And the worst thing is it continued for 10 years almost. The economy was in bad shape for US. So until 1939, that effect was felt, right? So that's where sometimes Warren Buffett says, right? Invest even if the market is closed for 10 years, you are not worried, right? So somewhere we need to get this point here. Markets can be in a bearish mode for a longer period also. So very important as an investor that if it happens, how equipped I am to face that situation. I think that is something very important we need to understand from any crash. Because many times we'll say market will recover. Yes, market will recover. The question is again, nobody will say how much time it will take to recover or when it will recover. Another classic example is that of Japan, right? Till 1989, the markets were booming. Nikkei was touching highs. But after that, all of a sudden, for another 20 years, they were down. Economy didn't grow. The population was old. And nothing was happening. So then the absolutely markets didn't go anywhere. Right? So that is something which we need to be clear. Then you don't know. It will recover, but how much time, nobody knows. So we need to be prepared for that. And of course, there were always loopholes before the SEBI came into the picture. So some smart guys used to take advantage of it, and one of them was Harshad Mehta, 1992. That is where all the loopholes, people were able to understand how we manipulated and took money from banks, and then that was diverted and he was rigging. And I can imagine when I just joined UTI that time, ACC was one stock which crossed 10,000 that time, right? So ACC, I can't even see how ACC at 10,000 that time. And of course, yeah, later on we came to know. I still remember I was in Bhopal that time. You will not believe many of the mutual fund schemes. 10 rupees NAVs were quoting at 120, 130 that time. Our master share, SBI, Magnum funds, all that meant unrealistic NAV. Unfortunately, we couldn't capitalize it. By the time I came back to Bombay, I think this scam broke out and everything came back to its original value, right? So scams were there in 92. And of course, the internet bubble. I think 99, 98 onwards, they thought that you don't need a brick and mortar company and all you need is only the internet-based selling, everything they thought. And people started attaching the name Infosys to their companies, and that's how it took up. And I still remember when it burst, when people, hardly the NAVs were 5 rupees, 2 rupees, 1 rupee. And again, classic example that time was Infosys quoting somewhere around 15,000, right? Technology stocks. Really it was crazy. And another gentleman named Ketan Parekh also was there that time. Yeah, who worked with Harshad Mehta earlier. So that guy was the scamster this time. So he created, he is known for his, we call it as ICE stocks, right? Or also sometimes they used to call the K10 stocks that time. ICE is nothing but information, communication, and entertainment. So he was only focusing on that, rigging prices. He also used the cooperative bank to swindle the money, and then it was diverted into market. So that was another scam which we faced. And of course, we all know the housing bubble which happened in 2007-8. And subsequently, all the markets got hit, right? We almost reached the peak, and then from there, 2008 is when we, just give me a minute. Yeah. So 2008, we all knew January 2008 or even till December 2007, everything was looking good. Sensex at almost 21,000 new high. And within no time, I think the fall started, and we have all experienced that 50% fall probably at that point in time, right? That was a big fall. Yeah. So we went through it. Many banks also went bankrupt. Lehman Brothers went bankrupt. And some of the banks They were supported by the US government and somehow managed to continue, right? Lot of problems in 2008 when we faced that time, but luckily our RBI governor was good enough that we didn't face a banking issues at that point in time when the real problem started with banks in US, right? So that is one good thing our RBI governor had done that time, Mr. Reddy, YV Reddy, and thanks to him, the banking sector didn't get hit that time. And of course, there were some crashes in 2011 because again, a lot of sovereign debt getting bounced, right? So Spain, Italy, then Europe also. France was supposed to be downgraded. Why I'm saying these crashes, I'm sharing this data is, though we say we may not be interconnected, there is no way we can be not connected, right? Something happens in US or any other market, the impact will come to the Indian market. So let's not even think that completely we are decoupled with other markets. Definitely not. We are definitely very well connected with other markets. So anything happening globally also we are going to get it. That is one lesson we need to learn from this. And of course, again, that's what I was saying. China economy was down. They tried to depreciate their currency and all that affected our markets in 2015. And of course, 2016, the main point was our demonetization. Initially, that negative effect was there, November 8, 2016. Apart from that, a lot of NPAs with the banks, all that also affected. And obviously, it reflects in the stock market. And the last, which we have seen as the 2020 correction, which also happened around 35 to 40%. As Mr. Ramlingam was saying, biggest challenge is our own behavior when market crashes. Especially. When market is bullish, nobody worries about it, right? But when the market corrects, that too by 30% or 40%, and you really see in your portfolio your value is down by 40%, it really hits you hard, right? Like say, for example, I still remember 2008, before the crash, my portfolio was worth 21 lakhs that time. But after the crash, it came to 8 lakhs, right? Such a steep fall in my portfolio. But there was no reason I had to go and sell because normally what happens is these are all notional losses. If we are going to make that sell decision, then it becomes a real loss. So that is where probably we have to control our emotion. I think that is one big lesson from any crashes. And if you see all these crashes, it could be for various reasons, right? Couple of instances it was scam, couple of times the economy was not doing well, right? So your market crashes, and then of course the black swan event of corona, right? So there will be different reasons for the crashes. Yeah. So it cannot be one reason always. Yeah. So we have to accept in future also these crashes are going to come. There is no way we'll be able to say that in future we may not get this much percentage correction, or if at all the correction happens, it will be not more than 5%, 10%. All these are absolutely illogical. The very fact what we have to learn from all this is crashes are going to happen and it will keep coming. Only thing we don't know is what is the percentage and when, that's all. These are the two we cannot quantify these two variables because we honestly don't know when it is going to come and how much it will come, right? That is where, that is another important lesson we have to learn from this crashes.